Let's get straight into the charts today. Kyle Rodda from IG is joining us to do just that. Kyle, great to have you on the show as always. Look, where should we start? What's the most important chart in the market to you at the moment?
Well, the most important chart, that's interesting. I mean, I suppose at the moment, what we're really seeing is thematics really starting to play out, and what traders are trying to do is effectively trade the headlines, move with the story. And overall, it's actually not such a difficult thing to do to pick directional movements in this market, because if there are embargoes announced, if there's a deterioration in the situation in Ukraine, you get that invasion trade starting to come through. So you've got oil prices moving higher in such a situation, gold prices moving higher in such a situation. You sell the euro and euro stocks. Obviously, the inverse of that is true when you see a positive headline come through. The difficulty, though, is really dealing with the chop along the way, and I think that's the real challenge that we've seen in these markets, as well as obviously some of the dysfunction that we've seen in parts of the commodity markets too. That nickel. Nickel prices going through the roof, and the LME effectively, cancelling, a day's worth of deals. But it was certainly not something that was, particularly well received by, our clients, and I'm sure many retail traders as well. So, at the moment, I can't identify necessarily a single chart there, but that invasion trade is still on. And again, the story is really what our clients are trading. It's an easy trade to make, but it's a lot of chop along the way, and it means that there's a lot of risk around messing up your money management, and also your timing and getting stopped out and what have you, in this kind of real choppy environment.
All right, well, let's dive into US equities then. What are we seeing in terms of levels, particularly on the tech stocks?
Yeah, really interesting that we've been seeing this kind of broadening formation across the index for the last 2-3 months as this kind of downtrend in this technical bear market started to really take hold. For me, you've got a couple of really key levels there to keep an eye out for. And for starters, we're starting to see potentially a bottoming out in the charts there. I think a lot of people and a lot of bulls will be looking at that kind of potential double bottom there, and that slightly higher higher low in price that we've recorded in the last couple of days as possibly being a bit of an indicator that maybe the fortunes are turning around. But really the key levels to watch for me on the upside are sort of looking at around 13,700, 14,000, which basically sits as a confluence of levels, and also includes the 20-day moving average. And then for me, what would really indicate a potential turnaround in this market would be a break above 14,400. So I mean, there's kind of a real kind of indecisiveness, I think, across US equities at the moment. There's a lot of calls that last night's move was basically just another example of short covering, and that we're going to stay in this trend to the downside. We're starting to see a little bit of divergence emerging in the daily RSI, so that's significant, and it's another thing to watch if we start to see that kind of pattern that you can see there on the daily RSI break out to the upside. But until we get through the 20-day moving average and around 14,000, it still looks like basically where we've got a sort of a bias to the downside. But a break above there would be really significant, so that's what I'd be really watching, as well as that double bottom as to whether it holds up or so in the next few days.
How does that compare to what we're seeing in some of the European indices, Carl?
Yeah, well, obviously the European markets have taken this on the chin. The growth prospects have been really diminished by the fact that we could see simultaneously a growth and inflation shock in the region, which would make the job very difficult for the ECB to set policy. And we'll hear more about that tonight. But you've also got clearly the DAX, for example, absolutely plummeting on the risk to growth. Refugee crisis that could spill over into Germany, and of course we're seeing the energy exports out of Russia potentially curbed, which would be obviously devastating for both inflation and growth in Germany, and that'll manifest in the profits of German companies. But as far as the DAX actually goes, last night's move was absolutely extraordinary. But even despite that, it was that sort of 7% move or whatever we happen to see. We did, we're still seeing that index in basically a downtrend after diving into basically a bear market territory in the last couple of days or so. So for me, the risk still seems very much skewed to the downside for the DAX. Again, it's a very much a narrative-driven market based on that kind of invasion trade. If we get another deterioration in relations, and the story starts to turn a little bit bearish again, you'd probably expect potentially that the DAX will go to the wayside. But effectively, like I said, you've got to sort of follow that narrative and follow those key levels on the upside if you can, to try and find those entry points if it does happen to be a reversal and we do get a breakthrough in relations between Ukraine and Russia.